Marketing Alchemy. This one is about self-directed IRA. Now, there's a lot of discussion about self-directed IRA. From my initial breakthrough came with knowing about self-directed IRA. So I've done as much research as I can. I don't think I'm an expert. I'm still learning, but as soon as I found out about it, I've gotten myself really good at helping people. And when you help people, for example, roll over their retirement accounts or help them see that, what they can do with their retirement accounts by setting up a self-directed IRA, it opens up more opportunities for you. So not only are you helping them, you're helping yourself, right? So this is part of the bonus. It's in the bonus folder in your in school. I'm just going to go through the highlights. All right. So in this report, I'm actually showing you the do's and don'ts of working with self-directed IRA accounts, how to help people roll over their regular retirement accounts into self-directed IRAs, and how to help your clients with self-directed IRA who already have a self-directed IRA invest in real estate as a private money lender. Help your clients earn interest income and not pay any taxes. So, um, you already know about self-directed IRA, but I use this word IRS approved. You will be shocked to talk to people who do not know about self-directed IRA or never heard of self-directed IRA. When you start talking about, oh, here's a way to roll over, but you didn't mention the word IRS approved, well, in their mind, they're thinking, oh, this is some kind of a thing that is outside the retirement account that, the government has, which is 401ks, IRAs, right? So you have to use the word IRS approved because this self-directed IRA has been around since I believe the in the late 70s. So it wasn't originally set up just when the 401ks and IRAs were set up, but this was set up quite a bit early. But anybody want to guess why people don't know about SDIRs? I'm curious. I know Steve is nodding his head, but I want to know why do you think most people don't know about self-directed IRA?
They're involved in the 401k probably with their company because the majority of the populace is gonna, at least in my
Finan-
perspective, they're involved in
Financial
a
planners don't make any
corporate
money off of
job.
self-directed, right?
There, who was that, Mike?
Like, yeah.
Okay. So I'm not into conspiracy theories, but think about it, guys. When the 401ks were set up, and the original idea of 401k was really good, actually, right? The employers were supposed to contribute or match part of the original contribution from the employee, right? But over the years, now it's gotten so bad. I hear that most of them don't even contribute anything, right? But the idea was this: the financial industry wanted a piece of the pie, right? And so they made sure that the IRA, the Roth IRA, and 401ks can only be invested in the equity market, which was the stocks, bonds, financial products, and all that, right? Why? Because, they wanted to sell them more products. And then you have financial advisors, stockbrokers, they all make money. Well, guess what? Self-directed IRA jumps over all of that hoop. That's number one. Number two, did you ever wonder? I mean, when I first had my 401k set up, my first question was, why cannot not I not invest in real estate? Nobody ever answered that question to me. And if you ever ask, if you have a 401k or IRA, and if you ever ask your broker, hey, I want to invest in real estate, you know what they'll say? They've actually changed their tune. They'll say, oh yeah, you can invest in real estate, and they'll offer you some kind of a fund that invests in real estate. And they'll say, well, you're investing in real estate, right? And so the idea was that once you have a self-directed IRA, well, that's what it means. You are deciding what you can invest in. You can still invest in stocks, bonds, by the way. With a self-directed IRA, you can do everything. So if you think about it, it's the best of the whole world. The only thing that is happening now is that you're also responsible. So the IRS is saying, look, we'll let you do this, but the consequences is that when you have a active custodian, so there are passive custodian and active custodian, right? So you have an active custodian, the custodian is on your behalf, which is I'm talking about Morgan Stanley and all these companies, right? They are investing on your behalf, even though you think that you're making the decision, but at the end, they're only giving you limited choices, right? I mean, these are the stocks you can invest in. This is what everything. We'll still make commission whether you make money or not, right? So those are your active custodians. Your passive custodians are people who, by IRS rules, have to manage the account on the books. They have to show that we are monitoring that the money stays within the tax sheltered requirements. So they're doing the basic accounting. They're not doing the investment side of decision making, but they're just making the paperwork is done correctly, right? You are now making the decisions on actually the investment decision, right? So the IRS now says that, okay, if you do that, then it comes with some responsibilities. So the investors can manage their own retirement funds and invest in broader range of assets. You can, I believe, you can invest in bitcoins. You can invest in gold. You can invest in a whole bunch of things. You can invest in businesses, by the way. You set up your LLC. You can invest in businesses in addition to being a private money lender. And you can invest as a private money lender in a lot of different things. Real estate is just one thing. You can also own real estate. You can do a lot of things. However, the important thing for you to understand now, I'm doing this so that when you talk to your prospective client, and this is your job, that's why when I talk to my private money lenders and they have a self directed IRA or they don't have a self directed IRA, I have to be knowledgeable. I cannot have a intelligent decision, a discussion with them if I'm not knowledgeable. So uh, you may want not want to do it. Say, well, I don't want to go. No, you. If you want to do this, especially if you want to work with custodians, you have to be enough. You have to have at least a fundamental understanding of how self-directed IRA and custodians work. So important things to understand. People cannot invest in real estate and or lend money as a private money lender using their regular retirement accounts. So they cannot do it in an IRA. They cannot lend money from their Roth IRA. From a 401k, they cannot lend money, but they can borrow money from their 401k, right? And then they can do whatever they want. But I'm talking about from the account directly. They cannot do these things. So now within your self-directed IRA, there are strict rules that have to be followed. And so I have a whole section in the bonus where I talk about prohibited transactions. Again, you just need to read it and understand it. You never actually, I also do the same thing. Just like if somebody asked you a accounting question, before you start even giving them your input, you're always going to say, I want to make sure you understand I'm not a CPA, but based on my understanding, and you give your input, right? I do the same thing with self-directed IRA. If somebody was asking me something, I'll say, well, this is what I know as far as I understand, but then I refer them to their custodian, their passive custodian to talk to them about it in detail. All right. So the certain restrictions are there are restrictions on dealing with disqualified people, and I have a whole section about that, who the disqualified people are. There's something called self-dealing. Now, guess what? I think you all of you know this. There are people in our community who are actually doing this. They don't know this. They are actually self-dealing. They're buying slow flips where they're self-directed IRA and they're paying themselves. That's self-dealing. And if they get caught, they don't realize how bad it can be for them. Number one, IRS will what they call it. Yeah, they'll force distribution of their retirement account. Force, which means they have no choice. Then they will put 10% withdrawal penalty. Plus, they might have some other penalties. So please understand that's why you want to when if you're talking with someone or if it's yours, make sure you understand the fundamentals. There are other restrictions, but these are the very basic ones. So I've got the four basic criteria that they are prohibited transaction, and one is self-dealing. And I'll give you a really easy example. Easy example is you use your self-directed funds, you buy a rental property, and the income from the rental property is coming back to you, and or if you're have a loan on that rental property, you're paying interest on that, and that money is coming from your self-directed IRA. In other words, you're doing things which is circumventing the way to pay taxes in any other way, and IRS doesn't want you to do that. All right, so be very clear on this. You cannot be using assets improperly. So this means, let's say you buy a vacation property with your self-directed IRA, and then you start using it for a vacation yourself by saving money. You cannot do that. That's improper use of assets. And there are certain kind of assets that are completely prohibited. Like you can't buy antiques, you cannot buy art or gems and coins and stuff like that. Okay, so here are the guidelines that you need to understand. Yeah, so this will come up every day for you. So this you definitely need to know, and I'll tell you why you gotta know this. If your prospect has a regular retirement account like a IRA, a Roth IRA, or a 401k, number one, so let's say you're talking to someone right now, right? And they tell me, yeah, I have a Roth IRA or I have a 401k. Before you actually even talk about, bringing them with your custodian, let's assume you're working with a custodian company and you can help them roll over, right? Before you go any further, ask them number one, why are they unhappy with their current type of retirement account and returns? Right? So you want to know what's the reason why they're even having a discussion with you, right? So what we're trying to do is this: number one, we want to ensure that they're not happy with their current returns, right? Number one. Number two, they're willing to do a rollover. So let's say they are not happy with their returns, but they don't want to do a rollover. Well, you can't help them, right? They have to do a rollover if they're going to work with you. So they come together. So understand that, right? um, 401ks, this has happened quite a bit. This is very easy for you to understand. So if somebody says, I have a 401k, can I use it for lending? The answer is it depends. So one clear test is this: if they have a 401k from an ex-employer, they can 100% do this. One more time. If they have a so they might have two 401ks. A lot of people have two 401ks, which means they're in a current job and they have a current 401k, and they might have quit from a job or left a job and they have an old 401k. A lot of people even forget about it. It's dormant, had a couple of $1,000 or whatever. That they can do a rollover. In the current 401k, they cannot do a rollover. All right. So that's one thing you have to understand. But they can do a rollover for a IRA and a Roth IRA. Now, with a 401k with the current employer, I've heard, and this is something I'm not an expert on, so I can't say it for sure. But my understanding is with the current employer, if somebody has a 401k, while they cannot lend money from it, they are able to borrow money from it. All right. Now, how can they do it, and what are the limits? The best person to answer that would be the program manager, whoever is managing their 401k. They can tell them, yeah, based on the 401k you have, you can borrow X amount. Do you see what I'm saying? So if somebody ever wants, oh, I don't really have any other money, I only have a 401k, and it's with the current employer, this is the route you want to go. So it is to your benefit to assist your prospect to roll over their account to the custodian and administrator you're working with. So here's a caution for you. Listen to me. If you are zoned out, this is the most important part. Most people do this, so please don't do it. I don't do it, and that's why I'm teaching you this. This is a very easy thing. I don't want you to do easy things. I want you to do the hard things. The easy thing is you have a custodian relationship and cool. All right. Yeah, I can help you roll over. And all you do is you give them a phone number. Oh, here's a phone number to the person, call them up. Well, guess what? How many things can go wrong? The person may not call. Now they have to do the work. They're the one doing the work to, set it up. You have to actively do it. So I'll show you how I do it, and it works really well. It works so well that everybody's so happy. It's all about psychology. So have you seen my posting on school in the Freedom Accelerator? Sometimes people have asked me, hey, uh, I'm looking for a self-directed IRA account, and I usually I don't post it publicly, but I tell them DM me, right? And I don't know if I've helped any one of you. I may have. So when they DM me, because I work with several custodians, I ask them questions. For example, let's say, these are the people who want to set up their own self-directed IRA account, right? So they DM me, hey, I heard that you have a relationship. So I ask them a couple of questions because I know people in our community also do other things. So I ask them, hey, do you have a lot of assets in your self-directed IRA account? Because I ask that question because some self-directed IRA charge based on how much assets you have, right? So it matters. Or I ask them, are you planning on doing a lot of transactions from your self-directed IRA account? Well, some SDIRA custodians charge a lot more fee per transaction, where they may have a flat fee and they can have unlimited transactions, right? So based on their questions, I refer a custodian to them. But this is what I do. I do a what I call a warm introduction. And that warm introduction is an email to the custodian contact. Now, this custodian person knows me personally, they know me really well. And I introduce that person with their phone number, email, and I copy the person, right? And now two people have uh, incentive to work. Is the custodian follow upping on the prospect, and the prospect already know who the contact person is. And 99% of the time, 1%, yeah, it may not go through if somebody just fails. But the custodians that I work with, they're really on top of these things, and they will follow through with this. So the benefit is for me is that I've helped the person who was asking help to set up their self-directed IRA account. I've also increased my relationship with the custodian company. Remember, the custodian company is not letting me do these workshops for their clients for free, right? They want something in it. They want more. And so this my way. So I don't have a lot of custodian companies will tell you this. Hey, set up an account with us. Every time you refer someone, we'll give you a commission. I don't do that. I actually purposely tell them, look, I don't want any commission from you, because this is what I do. I say just take care of my clients. And so what it does is they know that I refer a lot of clients. In their mind, I'm very valuable. So when I do these workshops, they love to help me there, have me there, do the workshops. So that's what I was trying to tell you is it's a little bit hard. It takes a little bit more time to get your prospect to get the information from your prospect, do a warm introduction, and then maybe follow through. Most of the time, I don't even have to follow through on this. They will come back to me and say, "Hey, thank you so much for the referral. It worked out really well. My account is all set up." Great. Do you see that? So that's what I would do. That's how I would work. Okay, things to know about working. Now, this is working with, of course, that's the final strategy that you're going to learn. We're getting there. So I'm just giving you an idea on what that is going to be like. Things to know when working with a custodian or an administrator. By the way, do you guys know the difference between a custodian and an administrator? Okay. Does anybody know? No one? Okay. So I didn't know that either. I recently found out. And it was funny. I was making a presentation to a custodian, and they liked my presentation, but they stopped me halfway through. They said, "Yeah, some of the people that you showed there in your list of custodian, one or two of them are not custodians. They're administrators." And so, of course, at that point, I said, "Yeah, I do realize that." But I mean, they are, $400 million company. So to me, it doesn't matter, custodian or not. But anyway, the difference is the custodians are directly approved by the IRS to run a self-directed IRA program. They are the company that runs the program. But some custodians, what they do is they're like a parent company, and they don't actively have the accounts. So that's when the third party, it's like a marketing company, they're called the administrator. They use the name of the custodian to run the self-directed IRA account. As far as I'm concerned, it doesn't matter, because they're also going to be working with you as the same way. They can do most of the things that a custodian does. All right. So in my books, it honestly does not matter. So that's why now I started using custodian slash administrator. So when we actually do the strategy part, I will go into a lot more details. So when you are working with a custodian, of course, there is a detailed vetting process. So expect delays. So once we learn the strategy, I will, of course, when you do start working on this, you will have to know that it's not going to happen overnight. It's going to take a while. But you will learn that custodian do require to see your LLC legal docs. They want to know who they're working with. They want to see a investment summary, which I will show you what I use to get myself vetted. They want to see sample promissory note. They want to see sample mortgages. Uh, it's a little off topic, but let me just tell you one thing so that you're very, very clear. When you work with any investment company, let's just say, okay, let's forget investment company. Let's talk about custodian or administrator. As soon as you tell them that I'm an operator, like, I bring the opportunity, right? Most of the people who work with them, they have some kind of a fun, okay? So you know what we are doing is not a fun. Are you guys clear on that part? Okay. When you have a fund, that means you're commingling funds. Investors are putting in money and it's a fund and all that. That's SEC regulated. Very, very strictly regulated. That's the reason why when you go out and advertise or post something, you have to be careful on what you're saying. What we are doing, as far as what Scott has told me and what my research is, we are not anyway anything to do with SEC because number one, that's the one of the first thing you have to. If anybody says if you don't mention it, a sophisticated investor, first thing you want to say is, by the way, this is a very simple transaction. It's not a fund. It's one investor to one property. That's the first thing you want to say. So it's very clear in their mind. Because if you don't and you go through your presentation, and if somebody, a sophisticated investor, they've done syndications and all that, halfway through the presentation, they're thinking that, I'm just one of the investor because 30,000 is a low amount, right? So a lot of syndications have minimum $50,000. So in their mind, they might be thinking this is some kind of fun. So upfront, you want to mention, especially if you're dealing with a sophisticated investor or custodian, just want to tell you, this is very simple. It's one investor, one property. First lien position, property is secured, insured, and protected, right? So very easily puts them at ease because as soon as you're talking about fund, I mean, they're gonna go through a lot of details. That's a lot of vetting. So that's why it's a lot easy for me or for you to get vetted by a custodian companies because in my investment summary, I tell them it's so simple. So when they look at it, they can't even believe it. They have to get back to me and say, "This is all there is." I say, "Yeah, this is it." So because they're used to looking at waterfalls and really really sophisticated models, so ours is very simple. One other thing you have to understand is unrelated business income tax. This will come up in your conversation with somebody who has a self-directed IRA account. So there's a whole discussion about it. I don't want to go into too much detail, but let me tell you, I didn't know about it the first time somebody asked me a question on a live presentation, and I had to admit that I didn't know. But then, of course, I got educated and I know. So here's what unrelated business income tax is. Let's assume you have a self-directed IRA account and you do a fix and flip. So you put your money with either you do it yourself or you do it with somebody else. It doesn't matter actually. And I'm talking about in terms of IRS because we're talking about a tax. So you must be saying, well, if it's a self-directed IRA, why are we talking about a tax? Again, it's because IRS, the fact that you have a self-directed IRA doesn't mean that you can do whatever you want. Remember, I told you IRS says that now you're responsible. So this tax kicks in if you do something that you're not supposed to do. So I'm trying to explain to you, and this is relevant to us. That's why I'm going into more detail. So let's say you have a self-directed IRA and you do a fix and flip. You did very well. You roll over the money, profits come in, and you do another fix and flip. And you do another fix and flip. Here's the problem. IRS doesn't tell you how many, but at some point, IRS sees that you're doing this as a business. That's called an unrelated business, and they can tax it. And guess what? The tax is at actual normal tax rate, which is really big hit. So the good news is, if they're doing private money lending as a passive person, it is not, UBIT does not apply. So you will get this question from somebody who already has a self-directed IRA. Hey, is private lending subject to UBIT? And your answer would be, based on my understanding, private money lending, if you work with us, is not subject to UBIT. That's all you need to know. Okay. All right. There are two ways for investors to fund using your self-directed IRA. I'm talking about now you're working with somebody who now has a self-directed IRA set up. Broadly, there's two ways how a self-directed IRA is set up. One is a regular setup. which means the custodian or the administrator has the control. Pay attention to this. You have to understand this part. One is a regular setup, which means the custodian or the administrator has the control of the account. Well, you would think, well, they have the control anyway. No, this one is different. This one means that when, let's say, you're working with that person and they have a regular account, the actual mortgage that you're going to create will have to go to the custodian. The custodian will actually sign off on it. Your private money lender themselves as an individual doesn't sign on it. So this is a very important point. And what that means is in terms of delays, it can cause a little bit more delay because your documents, and I'm talking about original document, has to be FedEx to the custodian company. Then they have to sign, and then now it has to go to the title company. Do you see that? So this is a little different. Even though the owner, let's say I own the self-directed IRA, I made the decision I'm going to lend, but the documentation has to be done that way. All right. So that's one. Now, the other way they can set up their self-directed IRA is called checkbook control. And you might all be familiar with this. I'm just going through this again. This is another way of doing it, and this is ideally the best way. If you have somebody set up this way, this is great. And all it means is this person literally has a checkbook. They can just write a check to you or they can wire the funds from their account. So in this case, when you do create a mortgage, you're actually going to send it to the private money lender directly. They're going to sign it, and that's how it's going to go. And the money is available rather quickly because they can just wire the funds. But in case of a regular setup, the custodian is just doing more due diligence just to make sure there's no fraud and all that. So it can cause delays. Okay, you need to know this because you may think, oh, it'll get funded tomorrow. Well, if their regular setup, it may not get funded tomorrow. All right. So you got to know this. That's that. So yeah, if they have a checkbook control, their benefits are its speed. They can do it really fast. They can write the check. They can wire the fund directly. It's more efficient. There's cost savings because if they have a regular setup, the custodian probably charges the owner additional charges for doing all of this. So that's just so that you know, okay? All right. That's it for today. So our to-do list this week, review the slides for this week, write down your questions for Saturday. You now have the crash course for PML in Canva. So when you this QR code that I showed you, when you scan this QR code, you have to have Canva, your own account. So you will have a duplicate copy of it. Now you can make your own changes to it as you go along, right? Download the bonus report. If you've done it already, that's fine. Now go through with it after I've given you all this information and try to understand what's in that bonus report. Again, remember, guys, you're doing this so that you are knowledgeable enough so you can have an intelligent conversation with your prospective private money lender. Now, remember, private money lenders are also people like you and me. It's not that they're expecting you to be like some kind of a super genius but they would be disappointed if they're having a conversation with you and you're showing them how they can use your self-directed IRA account and you don't even know how it works. So you don't want to have them be disappointed when you're asking them questions. Oh, I think the money will come from there, and they will have to tell you, no, this is not how it's done. And then now they have hesitation. They're thinking, well, if this guy doesn't even know how the flow works, does he know what he's actually doing? So that's it. It's not very complicated, but it's one of those things. Now, another thing, let me tell you, even though I do work with several custodians, everybody is different. Some custodians are very, there's a lot of red tape. Some custodians are easy to work with. So even though this is the general process, but on a case to case basis, so you really want to work with your private money lender and say, look, I haven't worked this specific custodian, so I'm not 100% sure. So we want to make sure about the process. So since I've worked with the same custodians over and over again, I know the process. Then it becomes easier. This week, so it's been a week, so let's do our PQ score test and let's share and see how we are doing.